What's going on, guys? My name is Ryan. I'm a CPA, and today I'm going to be talking about how to never pay any IRS penalties ever again. And yeah, you might notice today I'm sitting in a weird spot because I'm having some, strange solar phenomenon over there. Like the sun is just shining in a weird angle. So sitting over here today, it's all good. Definitely would love it if you would subscribe to my channel if you're new here. And also shoot this video a like if you would. And give me some comments below on what you think, if you have any questions, that kind of thing. All right, so talking about never getting penalties ever again, and I'm only gonna be talking about income tax penalties, not payroll tax, not excise tax, no sales tax, just income tax for today. And generally, most penalties from income tax come from either paying your taxes late or not paying them, or filing your taxes late or not filing them. So a failure to file and a failure to pay. Those are the two main sources of penalties, okay? So in order to really explain all this to you, I think you should be really familiar, like really familiar with the tax deadlines. So if you have a business that is either a partnership or an S corporation, that are taxed as a partnership or S corporation, your tax returns are due on March 15th, and that's obviously for calendar year filers. If you're a fiscal year filer, then it's due 2 months and 15 days after the end of your fiscal year. But for this purpose of this video, let's just stick to calendar year to simplify things. So March 15th, due date of partnerships and S corps. Then you have individual tax returns and C corp tax returns due on April 15th of every year. Now, I know the past 2 years have been kind of funky with COVID and new tax deadlines, extended tax deadlines, but normally April 15th. I mean, obvious stuff. Everybody knows this, okay? What that also means, though, is that you also have to pay your taxes by April 15th, okay? Now, if you are, for some reason, unable to file your corporate taxes or your individual taxes or your partnership taxes by the due date, you can always request an extension to file your taxes. So that gives your partnership and S corp returns extended to September 15th. That's when you can file after that. And then your individual and C corp tax returns, it gives you until October 15th. One other type of deadline that I will cover are quarterly estimated tax deadlines. If you're not familiar with this, I will go over that in a little bit. Okay, so now that we established that you have regular tax deadlines and then extended tax deadlines, it's very important to keep in mind that the extensions don't extend your time to pay your taxes. So your taxes, if you're an individual, are due April 15th no matter what, okay? Even if you file an extension. Same with the C corp taxes. Now, partnerships and S corps generally don't pay their own taxes. It's kind of rare that they do, so I'm not going to go over that. But individuals and C corps, you have to pay your taxes by April 15th, even though you extend your deadline. Now, you might be thinking, well, what the hell? That doesn't make sense. How do I pay my taxes if I don't know what I'm going to owe, if I don't know, anything about how much I'm going to owe? What if I get a refund? Like, how are they expecting me to pay my taxes by April 15th? Well, that's the thing. That's the complicated part, okay? If you suspect you're going to owe, then you should pay something by April 15th. If you are a business owner and you haven't been making any quarterly estimated taxes all year, and you have a profit, then you will likely owe taxes. So you should pay by April 15th. The more that you can pay up front, probably the better that you are, within reason. You don't want to pay like a substantial amount and then get a huge substantial refund after all is said and done. But if you can pay something up front, that would be helpful. You can always just kind of guesstimate how much you're going to owe. You can have your professional, your CPA kind of guesstimate how much you're going to owe by April 15th, and you send that payment in with your extension. It might be a little better to overpay just a little bit, just to make sure, because the failure to pay penalty is 0.5% of your outstanding debt per month, which annualizes to 6% per year. So it's not insignificant. It's still a pretty big penalty. So it's better to pay on the 15th, and if you could, just a little bit, maybe overpay, so that when the taxes are finished and you file them, you might get like a slight refund after it's all said and done. Now, if you don't pay on time and you file an extension, you can actually reduce the failure to pay penalty by 0.25% per month. And to do that, you want to sign up for an installment agreement. Now, don't just think that's like a huge strategy or anything, because it costs money to set up an installment agreement. So if you're going to owe just a few $1,000s, then it might actually cost you more to set up the installment agreement than to just pay the failure to pay penalty. But if you owe like several thousands of dollars, and maybe you can't pay it anyway, because you weren't saving up for whatever reason, then an installment agreement might be the best option, because it'll get you compliant, it'll reduce your failure to pay penalty, but you do also have to pay interest on top of that. Okay, so there's interest and the penalty each month. It totals to about between 10 to 12%, depending on what the interest rates are at the moment. And then there's the initial setup fee for the installment agreements. So it's not really ideal. It's better to just pay your taxes on time or as soon as possible. The installment agreement is just not ideal. I get a lot of confusion every year about this pay by April 15th, even though they filed an extension issue. Yeah, it's definitely an issue. And I think the best deterrence from this is getting your taxes filed on time. Don't be a last minute person. Just get them to your CPA, to your professional early in the year to get them filed on time, so that you don't have to worry about whether or not you should pay, a little bit by the 15th or not. Like that uncertainty can be kind of, anxiety inducing. So the best defense there is to get your taxes filed and paid on time. The next best defense is just to get some awareness over your tax situation. I prefer you or any of my clients to not be completely clueless when it comes to, how much you might owe, if you might owe, just understanding the basics of a refund and your tax liabilities, just that kind of thing might really help you understand what you're doing and help you from making, these kinds of mistakes in the future. All right, so earlier I talked about quarterly estimated taxes. Now, if you're not familiar, quarterly estimated taxes are for usually business owners or people with, unconventional sources of income. If it's usually for people who don't have a W-2, who have an employer withholding their taxes for them. It's just for people to basically pay their taxes throughout the year, estimate the taxes that they're going to pay it, and then reconcile it when they've, prepare and file their tax return after the year ends. So in a perfect world, what you're going to do is you're going to, go through the year, you're going to estimate how much taxes you're going to owe, and then you're going to pay it throughout the year. And then when it's time to file your taxes, you're going to figure out exactly how much you actually owe, compare it to the estimates, and again, in a perfect world, you're going to get no refunds and you're going to owe no additional taxes. Now, that's very challenging to do, obviously. So mostly what happens is people will pay a little bit throughout the year. When they file their taxes, they might either owe just a little bit more or get a slight refund back from their overpayments. The quarterly estimated schedule is on a kind of a weird schedule. It is by quarter, but the quarters are a little strange. And so I'll post a link to the IRS's website for the due dates for those quarterly estimated taxes in the description below. So check that out. It's kind of a strange schedule. So be sure to gain some awareness on that too. Because if you don't file on time, if you don't pay your taxes on time, or if you don't pay your quarterly taxes at all, there is something called a quarterly estimated tax penalty. Now, this penalty is not as severe as a failure to pay or failure to file penalty, but it's still a penalty. And this can just simply be avoided by properly making your estimated tax payments. Now, I made a video in the past saying, during uncertain times, it might be better to hang on to your money, like a pandemic. It might be better to hang on to your money, put it aside and save it for taxes. Just don't straight up pay it to the government yet, so that you have some money to hang on to, like a safety net. And during a pandemic, during times of uncertainty, I will stick by that. Even though it is required to pay estimated taxes, because the penalties are so insignificant, it might be better to hang on to your money if you're not confident in your current situation. Now, who is required to pay estimated taxes? People who think they're gonna owe more than $1,000 of tax liability after they file their taxes, those are people that should pay estimated taxes. There's a whole calculation on it. I'm also not gonna get into that right now on how much to pay, you know, what's the minimum that you can pay that will result in no penalty. That's all online. I'm not gonna get into that right now, but just know that if you think you're gonna owe more than $1,000 after your taxes are prepared and filed, then you should be making estimated tax payments. All right, so those are some of the ways to never pay tax penalties again. And to summarize, you gotta file your taxes on time. If you don't, then you will be hit with a failure to file penalty. Remember that includes extensions too. So if you extend your deadline, you're still filing on time if you file by the extended deadline, okay? Now, and then the next thing is you gotta pay your taxes on time. And that is due by April 15th for individuals and corporations. So pay your taxes on time, otherwise you'll get a failure to pay penalty. And then lastly, you have estimated quarterly tax payments that you gotta make throughout the year. And if you don't pay those on time, or if you don't pay them at all, then you have quarterly estimated payments penalties. So that's all I got for the penalties. Hope you found this video helpful. And hopefully if you didn't know about the tax payment deadline, you know, not being at all related to your extension, hopefully you learned something new here. All right, so that's all I got for today. Thanks for watching. Again, if you enjoyed this video, smash the like button and share this video, and please subscribe if you have not done so already. I would really appreciate it. And stay safe, y'all. Take care. See you next time.
I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that say stick up. She picture perfect, so I told him I'm a flick up. Bill, I'm in the mood for a change up. I leave the city and return with my change up.